Housing costs have left millions of Americans feeling priced out, and frustration is boiling over across the country. But a new forecast from Redfin signals there could be a turning point in the year ahead. Fox News contributor Katrina Campins joins us now. Katrina, do you agree that real estate sales are likely to pick up in 2026?
Thanks so much for having me, John. Happy Sunday. I do. I think that 2026 will be likely a reset, not a boom necessarily, but we can expect modest and gradual adjustments, not a return to the frenzied 2021, 22 style buying. That means that modest home price growth, median existing home sale prices are forecast to rise only 1% in 2026. Mortgage rates are likely to dip but remain elevated. Forecasts suggest that the 30-year fixed mortgage rates may average around 6.3% in 2026, a modest decline from recent highs, but still well above the pandemic-era lows. Some analysts envision rates occasionally dipping below 6%, but not staying there for long due to structural pressures from the bond and the treasury yields. Affordability will slowly improve, but still will be tough for many because home price growth is forecast to be modest while incomes inch up. Monthly housing payments are expected to grow more slowly than wages, which is a long-awaited affordability relief. However, many prospective buyers, especially younger buyers, first-timers, or families, may continue to struggle.
Yeah.
Forecasts suggest they may keep delaying home purchases, doubling up, or even staying in rentals, John. And I think that there's going to be a regional divergence expected, so not all markets will act alike. While some markets may see stability or modest gains, others, particularly in some high-cost or high-risk areas, could see softness. I think geography will matter more than ever, and supply conditions, local jobs, migration trends, and local economy strength will play a big role in each metro area, how each metro area fares.
Yeah, let's take a look, Christina, at the Redfin projections for 2026, the hot areas and the cold ones as well. Hot areas are expected to be the New York City suburbs, Syracuse, Cleveland, St. Louis, Minneapolis, and Madison, Wisconsin. And then when it comes to the markets that are likely to cool down in 26, Nashville, San Antonio, Austin, Texas, Fort Lauderdale, West Palm Beach, and Miami. So most of South Florida, at least the east coast thereof, projected to take a pretty big hit.
Well, what we're going to see happen is that the areas that saw the most growth during the pandemic are slowing down, and the appreciation is not going to be to the degree that we saw during the pandemic era. You're going to see a lot of suburbs around New York City continue to be in high demand because people still need to migrate to the city, and a lot of people can't afford to be in the actual city, or they want a better quality of life. You're also going to see areas around the Great Lakes there's going to be a lot of demand in those areas, Ohio and so forth. So the Northeast and the Midwest continue to see more demand and less supply, which is why prices there are also increasing. So it's kind of a catch-22, if you will. So I think that Texas, Tennessee, and Florida is going to see a little bit of the slower growth, although we're still going to see migration to those areas because of low taxes, especially if our governor in Florida in particular and the CFO decide to remove property taxes, which is going to be in the ballot in November. And so the people, the Floridians, are going to be able to vote on that. And if property taxes are eliminated, or if there's reform with your homestead, I think demand in Florida will skyrocket. We also, we have the Fed meeting coming this week, and there's so many things to watch. Markets and major financial institutions are increasingly forecasting that the Fed will announce a 25 base point rate cut at its next meeting, which is scheduled for December 9th through the 10th. If the Fed, John, moves forward with a cut, it could signal the beginning of a new easing cycle with more cuts possible in 2026. A lot of traders are pricing in an 87.6% chance of a 25 basis point interest rate cut in December, and most major global brokerages expect the Fed to cut rates by 25 basis points next week. Forecasts of additional cuts next year are particularly due to the change in leadership, not necessarily their read on the economy.
Katrina.
So while the Yes.
We're going to have to say goodbye, but thanks for your expertise on some pretty interesting issues.
Thanks so much, John, for having me.
Very many Americans. Katrina Campens, our Fox News contributor. Thanks.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.